The Bank of Canada lowered interest rates again for the second month in a row, bringing the key lending rate to 4.5%, which is going to shake up the Canadian housing market. This move reduces borrowing costs for mortgages and loans, which could cause a surge in housing. But will it be enough to actually do so? You're going to want to stick around to find out, because if you don't understand how this rate cut impacts the housing market, you could miss out on your opportunity whether you're looking to buy, sell, or refinance in this market. This cut doesn't come as a surprise to many, as most were predicting it, as inflation dropped to 2.7% in June, and a lot of this due to gas prices. And with the 2 rate cuts in back-to-back months, it is increasing the sentiment in the market. However, is it enough to actually make a difference? If you're already a homeowner and you've got a fixed rate mortgage, it really doesn't do anything for you, doesn't affect you. However, if you have a variable rate mortgage, whether that is static or a floating, then it's going to impact your payments in a positive way. The same goes for those with a HELOC. And so if you don't already know, the key lending rate that the Bank of Canada has control over only impacts variable rates, whereas fixed rates are tied to bond yields. And when we look at the difference when comparing a fixed to a variable rate right now, if you were to go into the bank or speak with your mortgage broker, there's still a pretty significant difference between the two, with fixed rates being quite a bit lower. So what exactly does this mean for you fundamentally? Well, if you were to go and try and get a mortgage right now to see how much you could qualify for, it doesn't actually allow you to qualify for more money if you're going fixed, which is what has been impacted. For example, even with myself, the reason why I'm actually in this room filming here right now is because I'm currently in a short-term rental, because I have some time in between the sale of my previous place and the possession of my next one. And over this period of time, I'm personally going with a 3-year fixed interest rate, and those have come down a little bit, but they have nothing to do with the Bank of Canada changing rates. So if you're not familiar with the home buying process, you can actually get a lower interest rate right up until the time of completion. I've been lucky enough that fixed rates have come down a little bit in that period of time. However, they're still close to 3/4 to 1 point below the variable rate. So this means that the most recent interest rate decrease isn't going to have any impact on my payments, unfortunately. And so those who are currently going into the bank or speaking with a mortgage broker and trying to maximize the amount that they qualify for, because a lot of times due to the price points here in the Lower Mainland, that's what people are going out to do, you're not actually going to be qualifying for more. If you are choosing to go with a variable rate, this is good news for you, of course, because it's going to reduce your payments and you will be able to qualify a little bit more. But if you're trying to maximize things, going with a fixed rate is what is going to get you the most amount of money at the lowest interest rate at this point in time. So from a fundamental perspective, this rate cut isn't actually improving buyers' maximum buying power or reducing their payments. However, the other major player and more subjective aspect of the market, which has a major impact, especially here in the Lower Mainland, is the buyer sentiment. But with the 2 rate cuts back to back and seemingly interest rates continuing to decline for the foreseeable future, this is giving people a better feeling and overall just more confidence in the market. But is that really enough to make any substantial difference in the number of sales and in prices? At this point in time, it's a little bit too early to tell. However, we're just going to have to see. But in my opinion, I don't personally see any sort of major impact on the market in the short term. I do think it will get some buyers off the sidelines and get some people that maybe are in the market and have been hesitant to pull the trigger, but I don't see any substantial change overall. One interesting thing I'd like to point out is the fact that I've actually had more sellers reaching out to me based on interest rates than buyers. And based on these conversations, it's become very clear that sellers are believing that with these interest rate cuts, it's going to bring far more buyers to the market, which of course is going to achieve them with a higher sale price. But personally, I don't really think it's going to have as much of an impact as they might think. And what I'm seeing right now is a lot of people deciding or being advised not to list their properties towards the end of July or into August, because it's always been thought of as a slower time of year with kids going back to school, good weather, people on vacation. However, the data actually says differently. And when we actually look back at the past 3 years, there have been more sales in August and September in all 3 of those years. And with inventory already quite high at this point in time and more sellers sitting on the sidelines waiting until we get to September, I'm not necessarily sure you're going to get a higher price then than you are listing right now. Now, obviously, it's going to depend on property type, location, price point, and many other factors. However, if you're someone who is in the boat of deciding to wait until September to list your property and you have the ability to list it sooner, I think it's at least worth another conversation. However, the next interest rate announcement is on September 4th, so there is nothing in August, and if we do see another decrease at that point in time, this could bring even more buyers off the sideline. So there is kind of 2 opposing factors here. However, if we see a flood of inventory, it's really not going to be enough to make a major difference, at least in my opinion. Now, if you're a buyer in the market right now or thinking about getting into the market and you're waiting for interest rates to come down further, it's not something that I would suggest. The reason being is when things turn around in this market, they usually turn around quickly. And while prices aren't necessarily rising at this point in time, I don't think we're going to see any sort of major declines either. It's more than likely that things are just going to kind of trend sideways for the most part over the next couple of months. So my advice to you is not necessarily rush into anything, but show a little bit of urgency, because there are some motivated sellers out there right now, and you do have a lot of options. So you may as well take advantage of it when you have the opportunity, because again, once things turn around, you don't want to be in that situation. Even if you were to save a couple $1,000s, even let's say 1% on the property price, it's so much better to be able to do your due diligence, not feel rushed, be able to pick from all the properties that are currently out there versus being limited to just a couple that match your criteria. Because I can almost guarantee you that in 5 years from now, you're not even going to think twice about what that minor difference in price was if you get to choose the property that you want to live in and you're still getting it at a great price. But at the end of the day, everybody's situation is different, and all I can advise you to do is educate yourself and prepare yourself for the time that you are ready to enter the market. Don't try and time it. Just make sure that you're in a good position financially, you understand what you're doing, and you're thinking about the long-term future and not just the short-term. And if you want to continue this conversation based on your unique situation to find out whether it's potentially a good time to buy, sell, invest, or just have a chat about the real estate market, you can scroll down and click the first link in the description to book a call with me at a time that works best for you. And while you're at it, be sure to download my free buyer's guide, seller's guide, or pre-sales guide so you can educate yourself in the meantime. And that's about going to do it. So thanks so much for watching, guys. Make sure you check out another video on my channel before you get out of here, and we'll see you in the next video.